Uh, Greetings to you all, and welcome to today's lesson, which is going to be market structure. Now, in this lesson, I'm going to keep it very simple, very basic, and that's actually what you need, all right? Because when it comes to trading, it's not the complex things that will make you money, all right? Because you need to understand that the main thing that makes money, or the main thing that you as a trader, you need to make money in trading, it's not too much of this analysis and stuff like that. You need to first of all work on yourself, work on your mind, how you see the market, right? And then you put in your risk management and all those other things. But when it comes to trading, when it comes to the charts, you just need to understand the basics and then you master them. All right. If we say that this is market structure, which is the topic that we're talking about today, if you can just keep this as basic as possible, you are going to still make a lot of money. When it comes to support and resistance and all those stuff, all of them work. But now when you try to complicate it, when you try to complicate it that much, it becomes what you are trying to do is to eliminate the probability of the market, which cannot be eliminated, right? As the more you are struggling that much to maybe eliminate losses, or you are struggling to learn every new strategy with hopes that you're going to one day have a strategy that does not lose, what you are trying to, or the journey you are heading to is not a good one. And the end of it is not always good. You confuse yourself the more, and at the end of the day, you will have to come back to the basics and just apply good risk management, and then you will see yourself improving day by day. Now, when it comes to market structure, it's not rocket science, but you all already know about the various types of structures that are there, which we have three. All right, we have three. We have an uptrend. I will not go too much on the basics because everyone that is here already know about that, but I want to show you something very important when it comes to market structure. We know this to be a downtrend when the market is creating lower lows and lower highs. And then we also know this to be a ranging market. When the market is neither creating higher highs nor higher lows. This is your downtrend and then this is your uptrend. So when you open your chart, it's either the market is doing what it's either the market is in any of these three phases. When you open your chart to analyze the market, you will likely see the market either ranging or trending up, or the market will be trending down. Okay. Now, when we look at the downtrend like this, okay, I want to open your mind to something today which is very, very important. Now, this is a ranging market and this is an uptrend. Okay. Now, the main problem that people have, or that traders have when it comes to trading, is time frame alignment, or understanding time frames. That's the biggest problem that traders have when it comes to analysis. They don't understand the intricacies of time frames. Okay. Now, what this simply means is we are having a downtrend here, and the reality behind this downtrend is simply the fact that this is a bearish candle on a higher time frame. So we simply have a bearish candle on a higher time frame like this, and on the lower time frame, it gives us a bearish trend, or it gives us a downtrend. And now, with a ranging market, what we simply have on the higher time frame is an indecision candle. Okay, we have an indecision candle. Sometimes you can have the candle like that, it's thick, but it's the body has not traded too much or to the upside and stuff like that. So this is when you have a ranging market. Now, when you, for a bullish trend is simply a bullish candle. A bullish trend or an uptrend is simply just a bullish candle on a higher time frame. If you guys were following up, you will notice that this downtrend that we have been having on DXY, if we go to the yearly time frame, we're still going to just see that it has been just one candle which started right up from here. All right, this was the high. I think we talked about this in our last lesson, right? We had just one candle. This was January. All right, this was January. Monday, this was January. So this downtrend that we have been having on the weekly time frame is a single candle on the yearly chart. What that simply means, that just explains what I've been trying to tell you here, that when you're having a bullish market or a bullish trend, it is a single candle that is forming on the higher time frame. All right. Now, if you understand that very well, market structure will now start to make sense to you. You will now be able to know that, okay, if I'm expecting a bearish candle on the higher time frame, what should I see on the lower time frame? A downtrend. If I'm expecting a bullish candle on the higher time frame, what should I expect? A higher time frame, an uptrend. If the day wants to end up as a contraction or as an initial candle, then you're going to have the structure that is like this, which is neither moving up or down. All right. Now, you already know about the basics of structure, where we have this is a higher high, we have a higher low, a higher high, a higher low, a higher high, and a higher low. Now, you will believe, or you will bear with me, that you sometimes see market structure like this. Okay, if you have seen market structure like this, type 1 on the chart. If this is how you see market structure, type 1 on the chart. Okay, now, which of these often happens, A or B? Which of these often happens, or which, most of the time, which of these trend, or which of these uptrends do you mostly see on your chart? A or B? Good. A. All right, good. Now, this is mostly what we see on the chart, right? Now, you tend to ask yourself, now, what is the problem, or what is happening with this candle, with this structure? Why is it not just as a creating clean highs and clean lows? Now, to understand what is going on with this structure, and which is still an uptrend, because this is literally not a break of structure, all right? This is not break of structure. I think we'll talk about it as well as we're moving forward. We'll come to a point where we understand this to be inducements and price rating stops and stuff like that when we'll be getting into liquidity. But now we want to just keep it basic on market structure. But I want you to understand why this will happen based on candle formations. Now, you also bear with me that when you're looking at your charts, you don't just see candles just moving straight up like that, right? It's not, there is a particular chart that have this type of candles. I don't know if I can see that type of a chart. Renko. Okay, good. Now, this is a Renko chart, right? Now, if you look at a Renko chart, you see how it forms, right? When it's bullish, it's just forming bullish candles. When it's bearish, it will be forming just bearish candles like that. This is a Renko chart. But now, if we want to go back to the candlestick chart, we'll notice that this area where we have only bearish candles literally was not just bearish candles, right? Let's go back to that, and then we'll see that area. Where was that? Where was that? Where was that? I had put a mark on it. Let's see, where was that? Okay, I think I've lost it. Let's go back to Renko chart. Okay. Anyways, now let's look at this one. This is a Renko chart on the weekly, right? You can see that we have how many weeks? 1, 2, 3, 4. 4 weeks, and this currently, this one, straight bearish candles. But if we look at it on the normal candles, you're going to see that we had a bullish candle and stuff like that, right? Now, what am I trying to, which message, or what am I bringing your attention here to? When we see structure that is like this, okay, it doesn't literally mean that price is shifting structure to the downside. I am bringing your attention to understanding candles, because that's the key to technical analysis. Now, what happens for this? What happens when this candle is forming? Or what happens before price takes a low and still continue higher? I know that most of you will say that, okay, this is inducement, price is coming to fill a fair value gap here. Actually, that's what is happening, but let's just maintain it on having a candle and having a structure. Now, this here, if this is about, let's say this is the 1 hour time frame, we're going to see structure like this. Or let's put it, let me draw something like this. Okay, we have let's say we have a bearish candle now. we have a bearish candle like that. And then the next one, we have bullish candles. Okay, we have, this is a bearish candle, so a bullish candle opens straight up like that. And then structure continues. Now, I believe this is how you most of the time going to see the market, right? Where you have series of bullish, then one bearish, series of bullish and stuff like that. Now, this bearish candle is actually the reason why we are having this movement, all right? Where we're having that movement. Now, let's draw market structure based on this now. If we put out the line like that, okay, because remember, every candle that I pointed here brings a structure, right? So which means these two first candles, they are going to give us a bullish structure, right? Right up to this point. Now, this bearish candle should give us a what? A bearish structure. This bearish candle should give us a bearish structure. And then we notice that this one is taking the low of this candle. So which means we're having another push again to the downside to create the low of this one. And then price continue higher. It ends at this point. Then this one comes in. And then it trades back down. This one, this is the low of this candle. And then we move back up like that to create that high. Now, this is simply the structure that we can see based on these 5 candles. All right. Now, this can be the 15-minute time frame. And you also notice that at this point, we were kind of like having a small downtrend, but then price continued higher. Now, if this is the 15-minute time frame, if we're stepping up to the 1 hour, what we are going to see is what? Probably something like this. Price moves like that, okay, with this swing move. And then this pullback, we have something like that. And then price continues higher. Now, you are going to notice that the more we move higher, the lesser pullbacks we're going to have, which means that if we're going out to the 4-hour time frame, we're going to just see something like this, right? These little pullbacks will reduce. And the more we are now moving to a higher time frame, we're just going to see a single push like that, which is this one we are seeing right here. Okay, I don't know if you guys are following up. Now, what I'm trying to make you understand is when we are having a bullish trend, this is simply just candles that are forming on the higher time frame. Okay, just for example, like this week on DXY, this is the weekly candle, right? We have been dropping, and you can notice here that, all right, the weekly has been bearish. This was a higher high. I mean, this was a higher low that was formed here. Okay, this was a higher low, this was a lower low, and then this is another higher low, a lower low, and now we are about to form another lower low. Now, this is a bearish trend, right? And now also this is a bearish candle. But if I mark out the high of this candle, because from starting right on Sunday, I think I sent this analysis to you guys on various groups telling you that we are going to have a bearish week for DXY, right? I think I sent that to the WhatsApp group and even on the Telegram that we are going to be having a bearish week for DXY. Now, we are expecting a bearish candle. So what type of structure should we expect on the lower time frame? A bearish structure, all right? And you can see that clearly here as price have been pushing lower since the beginning of the week. You can see that we have been having a very clear downtrend since the start of the week, right? Price is pushing higher, and today we reach our target, and now price is shifting back to the upside. Now, just look at this structure right here. This is a bearish structure, but it is a single candle on the higher time frame. A single candle on the higher time frame. This is what I actually want you to understand. Now, the day that we're going to be talking about inducement, we're still going to be talking about market structure during that class, and we'll explain exactly when to expect this in price taking out a low, which is going to be based on fair value gaps and other blocks. But for now, since we're not yet talking about fair value gaps or other blocks, I just want to keep it at the level of understanding why price will break a low like this. Okay, now furthermore, if you want to look at this structure, let's try to see what happened here. Let me clear the chart. Okay, now we have actually been on a downtrend since let me say since from here, right from this point. Okay, let's say from this point, we have been on a downtrend. But if you look closely, you will notice that price came back and took this high. All right. So we're on a downtrend. We are on a downtrend, creating lower lows, lower highs. And then the market came back, took out this high, but then still continued to the downside. Why did this happen? We are on the 30-minute. Why did price come right back up to take out this high? Now, I don't want to start telling you that, okay, it is because price wanted to mitigate another block here and stuff like that. All right. We are not here talking about other blocks. I just want us to understand this scenario based on a candle. All right. Why did price take out this high? Now, if we want to understand it, we now have to move up to the higher time frame to understand whether this movement was because there was a bullish candle that was counter trending the previous bearish candles that we're having. So what we're going to do, we go to the daily. Now, when you look at the daily time frame, you notice that when price was bearish, we had some couple of days that were trying to be bullish, right? And I think even on the weekly time frame, that was this particular day. Okay. All right, where we have that bullish candle. Now, you will notice that the reason price took out this okay was actually to fill this fair value gap, all right, which was the main reason. This was the main analysis I sent when price was still around here for this week. Okay, but now I want us to understand why that happened. If you look here on this daily time frame, you actually don't see anything that will make you think that price wants to move higher. But now when you go down to the lower time frame, you will start to see that, okay, there was a break of structure here. Okay, price should continue higher. And I think a lot of people expected bullish prices from here, expecting that, okay, this was a higher high, this was a higher low, then price should now continue higher. No. All right, price will not continue higher. The reason is because a break of structure on the lower time frame is not just a reversal. All right, it now the main thing that will make that break of structure, or that will give sense to their break of structure, is what the higher time frame is doing, is what the candle on the higher time frame is trying to do. Now let's try to see if we have any good example. Now let's look at this area. We had price expand to the downside, and then we had a day where price, this particular day, came back out to take the previous daily high. All right, taking out the previous daily high was also to fill this fair value gap. But now, if we move down to the lower time frame, we're going to see something at that point. Remember, I said if you have a lower time frame break of structure, what is going to give meaning to that break of structure, whether you should expect a reversal or a continuation, should be coming from the higher time frame. All right, so this is the particular area here. And if you look closely, you will notice that, all right, this was like a break of structure back to the upside. Okay, this was a break of structure, very clean break of structure, because what? We had, this was a low, this is the high that created this low. All right, unfortunately, this low was taken. So this is now a new low, and this new low was formed because of this high. So this is a valid break of structure, and price should continue higher if that is the bullish trend that is starting. But now this break of structure here, what should give meaning to this break of structure is what we are looking at on the higher time frame. All right. So when you are looking at market structure on the lower time frame, you're just going to be confused, thinking that, okay, why did price take this low and still continue higher? Or when price takes a low like this, you start to say, okay, let's identify a key level and sell. When you sell, price just move higher. You are not confused that, okay, you said market structure is this and that, and then what is happening? Remember, a break of structure on the lower time frame is just how do I put it, has no meaning unless the higher time frame tells you what to do. All right, so the moment you see price breaking a structure on the lower time frame, what you have to do is go straight up to the higher time frame, and then you understand what is going on. Why is that break of structure happening? Okay, if you don't understand the story behind the higher time frame, you can allow it. It means that the market is confusing, and you let it be. All right, you let it be. It means that the market is either consolidating and it's not a favorable trading condition. Because sometimes you are going to even see the daily might be trapped up in a very tight consolidation. And then if you want to be looking at market structure breaks as, up and down, at the end of the day, you'll be taking unnecessary losses because the market is taking previous daily high, coming back, taking the low and stuff like that. You will end up taking so many losses for no reason. Okay, so what I'm trying to do here is I'm bringing your attention to the higher time frame. You understand that the market structure or real trend starts on the higher time frame. Okay, even this break of structure that you think that happened here, okay, this was a break of structure, a very clean one. But what happened? Price still continued to the downside. Why did that happen? You look at the weekly time frame. Do we see any break of structure here? I don't see any. All right. The only thing I can see here is an obvious high, another one, another low, and stuff like that. This one now. When you're looking at structure, let it be very visible. All right. It should be clear. The moment you're trying to force it out is just the time you are trying to force a trade. It simply means you are not patient enough and you're trying to force trades, which is not good. Okay. Now, let's talk about market structure again. Now, there is a lesson we are going to do which is going to be support and resistance, which we are going to talk about break and retest, especially when it comes to bullish trends like that, where price breaks, okay, where we have price breaking a previous higher high and then it becomes a support and stuff like that, just like that, and then retest and to continue higher. This is going to be a lesson which will be on support and resistance. But for now, also, this is very important. Okay, understand this very well. You're going to have a clean structure like this. It is going to happen. All right, it's going to happen, especially on the higher time frame. But understand the narrative. This pullback that you're going to see here on the higher time frame is going to be a downtrend on the lower time frame, which simply means you have an uptrend like that, you have a downtrend, you have another uptrend, a downtrend, because the more candles are adding, all right, the more you are having more structures that are coming in. So this is what you're going to have when it comes to, let me put it like this. So market structure is very, very important. It's like the foundation of everything that you're doing. Okay, is the foundation of everything. But you don't just read market structure like you are reading a pattern. I think I'm trying to explain that now. You are not reading market structure as if it's a pattern that, okay, price should make higher highs like that and higher lows like that. Now, you also know about reversals where you have when the market is trending higher, okay, and when it starts breaking lows like this is a signal of a reversal. It doesn't just mean that price wants to reverse. It's just a signal. All right. When if price goes up now and it fails to break this high, it comes back down to break this low. Now, this is actually a confirmation of a bearish trend. But also, this is only if you are looking at it on the 30-minute or the lower time frame. But first, you have to ask yourself, why should price reverse from here? And the answer should not come from this time frame. The answer is going to be coming from a higher time frame. If the higher time frame has hit a key level where we expect a reversal, just like here, price hits this other block and then we expect reversals. If we're expecting reversals here, now this would have been an uptrend on the lower time frame. The moment price hits a key level now, we can start having a bearish candle. But now that bearish candle is going to be symbolizing it. We're going to have a bearish structure on the lower time frame, like that. So we are having a reversal on the lower time frame, and there is a confirmation of it on the higher time frame. Let's look at this example. We see price having a pullback into this fair value gap, right? Now, this bullish weeks, 1, 2, 3, 4 weeks, price have been bullish and it's a pullback actually because we had a high here, we had a low, another high, and like that. So this is a bearish trend that we're having, and this is currently a pullback. Now, take note that this is a pullback of 4 weeks on the weekly chart. Now, this means that we have a whole month to be buying this pullback. All right, we have a whole month to be trading a pullback on this chart. Now, you understand that this pullback, which is happening on the weekly, is going to be giving us a bullish structure when we go down to the lower time frame. Let's look at it on the 1 hour. Beautiful. This is the area here. This is the fair value gap that we're having, and you can see price was on a downtrend. Okay, we shifted higher, and then price started creating bullish structures. Now, when price went in, when the pullback was over, just like I was explaining before, we started seeing what? Shift in market structure to the downside. All right, and then the market continued the downtrend. But now, many people would have expected that, okay, we're having a downtrend, we're having now an uptrend here, this uptrend should continue. No, it's not going to continue. Why? Because higher time frame does not support that. Okay, higher time frame does not support this to continue. Why? Because it was just a pullback that we are having on the higher time frame. So this pullback is not going to last. Okay, but now we had a whole month to trade this market. We had a whole month to trade this pullback into having a retest of this structure that was broken, which is also a fair value gap on the weekly chart. Okay, so I've tried as much as possible to keep this basic, bringing your attention to understanding that structure is based on candles coming from the higher time frame. The moment we are having a contraction month, know that we are going to have, if we're having an easy decision month, this is what we are going to have. We're going to have a monthly price action on the lower time frame that is consolidative, or is a contraction month. All right, which means on the higher time frame, we'll just have a candle that is like that, neither buying or selling like that. Okay, I think you see that if you go to the monthly, you're going to see some months like that, right? This is the monthly time frame. If you look closely, you will notice that there were some months like that, right? Price was going up, but we had some months of pullback, which was like a consolidation. Let's see how this area looks like, maybe on the 4-hour chart. Okay, I've gone too far behind. All right, I wasn't using the right window for this. Okay, now let's look at this structure here. We're having a very clear bullish trend here. Let me just delete this, and then we'll take this one to the monthly chart. We have a very clear bullish trend here. Okay, but now if we move to the monthly time frame, let's try to see that bullish trend that we're having. What is it on the lower time frame? Okay, good. This is the area. Series of monthly candles. All right, series of monthly candles giving us a bullish structure on the 4 hours. How many months? 1, 2, 3, 4, 5, 6. What this actually means, if we go to the 6 months chart, maybe we'll have just one candle around that area. Nice. This is the candle. One straight bullish candle. One straight bullish candle, January 2022. If we go to 3 months, we are going to see like 2 candles there. Right, you see that? 2 candles. 2 3 months candles. Just straight 2 bullish candles. But when we're moving down to the lower time frame, we see something completely different. We see a bullish structure. All right, we see a bullish structure. So understand this very well. When you are expecting a structure on the lower time frame, your primary objective should be to know how the candles are going to form on the higher time frame. Let me just give you a quick example as to why I was expecting DXY to be bearish throughout this week. Now, starting from here, we knew already on the weekly that we're having a bearish market, and you can also see the market has been pushing down. And then we had this internal range liquidity here, which was this fair value gap, and also it was around an inversion gap as well. So this is like an area of resistance, which is going to resist price to continue lower. Fortunately, when price came into that area, which was on Thursday, you can see that price gave us a flagship reversal or an engulfing candle. With the lesson you guys studied yesterday, this is an engulfing candle, right? Now, this engulfing candle is telling us that sellers are into the game or selling volume has increased and price should likely continue lower in the direction of the higher time frame, right? So this is confirming that as the weekly is bearish, selling volume is also coming into the market. So this is a confirmation. When this happened, and then we knew that, oh, okay, price wants to continue lower. Then after just seeing this, you expect a couple of bearish days, right? In line with that direction. So since I'm expecting bearish candles to form, to target or to make a new lower low, what I simply need to do is expect bearish structure on the lower time frame. It's just that simple, right? Expect price to be giving us a bearish structure on the lower time frame. And right from here, we noticed that we had a little pushback to the upside, which was like a correction. And then what happened? Price started breaking structure to the downside and giving us pullback entries just like that. Okay, so I think I've explained a lot, and I'll make this lesson available so that you can go over it again. If you have a question, you can ask, and then I will answer it in the next 4 minutes before this session will be closed. Oscar said, "Thank you, sir. I was always having this problem. I understand a lot of problems that traders are facing is because they ignore higher time frames, or they don't know what to see on the higher time frame. But before the end of this training, you should be able to know exactly what to look out for on the higher time frame and know exactly what to see on the lower time frame. The moment you see a particular candle on the higher time frame, like for example, the weekly, the daily that we just saw right here, which I said we had a bearish engulfing, the moment you see such a candle forming at a key level, you already know that the following days are going to be bearish. The following days are going to be pushing to the downside. And in that case, all you want to do now is align yourself in that direction based on your market structure, all right? Because you know that you're not supposed to be buying in a downtrend. So what you're simply going to do is align yourself in that zone. Align yourself in the line with the market structure or in line with the higher time frame. Okay, so we are using now this 1 hour structure to align ourselves with what is happening on the daily time frame. It's that simple. The daily has already given us an engulfing at a key level to support the weekly direction, right? So now we are on the 1 hour. What we want to see is a bearish structure to sell on lower highs, take profits on lower lows, sell again on lower highs till price reaches our key level, just like it did here, and now price is reversing, right? So that's I don't know if you guys have learned something, but with time, market structure is a lesson that we'll keep talking about it till the end of our training program, because when you're going to other blocks, we're still talking about structure. We are going to, whether it's supply and demand, we are still with market structure. Mostly everything that we're going to do will still be on market structure, because there are only 3 ways that you're going to see. There are only 3 phases of the market: uptrend, downtrend, and a ranging market. So whatever we are doing, we want to learn either how to trade an uptrend or trade a downtrend, what to see before we consider this to be a downtrend and stuff like that. So throughout this program, we're only going to be still referring back to this structure and so on. But for today, I wanted just to make you understand that, understand the difference, or understand how to be able to read structure just based on a higher time frame. Let's say today price closed as a bullish engulfing. Let's just assume something like this, that okay, on this is DXY. Let's just say this bullish candle trades right up to this point and close above this candle, right? Now, I would want to say that, okay, tomorrow price is likely going to be pushing up again, which means that tomorrow I want to see a bullish structure on the lower time frame so that I can buy these lower higher lows, right? It's that simple. Now, maybe based on what we're going to talk later, which is about inducement and liquidity graph, I will now expect that, okay, if this candle is closed as a bullish engulfing, tomorrow I want to see a drop below a swing low and I buy, right? So that's basically it. And let me see if you have questions. I have a question, but at the end. So always start analyzing on the high time frame, and we look for entry lower time frame, same bias as the high time frame. Correct. Now you will ask yourself which one is higher time frame. If I'm a scalper, what should be my higher time frame? We're going to talk about that. Okay. So to confirm a church, it needs to take place in the higher time frame. Yes. Thank you, sir. This helped me clear my doubts with why I lost my profile account. Sorry about that. Just make sure you practice more. Now, when you say this confirm a church, it needs to take place in the higher time frame. Not necessary. You don't need a break of structure on the higher time frame to confirm a break of structure on the lower time frame. On the higher time frame, you just need a candle confirmation. All right. Then